Welcome back, traders. Let's take a look at how this week started in the markets and what's setting the tone for the days ahead. This is the 2 days of this week so far, Monday the 3rd, and today is Tuesday, November the 4th, wrapped up in this down candle so far on this weekly chart. We'll come back to the daily chart at the end of the video and talk about some forecasts. On Monday, we kicked off November with a bit of indecision. October closed out pretty strong, and the final weekly candle gave us the potential for a reversal setup and a bounce from the long-term trend line right around 689.50. That's a weekly signal though. So if it ends up meaning something, it could take some time to materialize. That's some of the things we talked about in the game plan on Monday. In the meantime, most other time frames coming into Monday were still bullish, sitting above their respective 50-period moving averages. On the 2-hour chart, price looked like it was bouncing from the Friday's low, and we were keeping an eye on 685.06 as our possible pivot or an axis level for the session, and price had already started flirting with that area during the pre-market. But despite the bullish structure, we did not have a strong directional edge to work with out of the gate, just a lot of crosswind. It was a PMI data release at 10 a.m. on Monday that had the potential to be a catalyst, and price was still moving cautiously as of 9 a.m., pushing up slightly, but not fully committing. So the game plan called for 685.06 to serve as our axis. That's a reference point that could help us gauge the battle between the bulls and the bears, and it could be traded only if approached correctly and confirmed by real-time price action. Also talked about a zone up at 687.64, 687.92. Did not come into play. They never got that high. Basically, it was a base hit mindset if the market was acting normal. And here is a screenshot of the 1-minute chart with the levels plotted before the opening bell. And looking at the entire day on the 1-minute chart for Monday, we can break down what happened. Price came down into 682.72. It was after our 15-minute window that would have triggered the first long trade played by the rules, but it did not hold. Price dropped into the next level. And by the way, these levels are considered adjusted with the 5-cent buffer. So 681.40. This would have been 682.77. Everything is treated the same way. So that meant this level here was hit precisely and would have been averaged in. Unfortunately, that was not enough to produce a bounce with this combined position. Instead, a max loss threshold of 20 points was hit between these two entries. So that's a 40-point loss, which is rare but possible on any given day. So these two levels are not tradable on the long side anymore, but there was a recycle trade right here, 682.67, 5 cents toward price. As price came into it, they pulled away. That's a clean 4-point base hit for this recycle trade. And that wrapped up the valid trades for the session on Monday. No other levels were hit. So from the playing by the rules standpoint, the day ended with a net of negative 36 points. Not a great start for the month. As for my own trade, I stayed mostly by the book. I did take the long at 682.72 with 6 contracts, but I did not add at 681.35. And what I ended up doing was holding much longer than I should have, or slightly longer than I should have, and finally exited
Bag up.
with around 23 and a half points to the negative.
Bag up, Terry. Put it in reverse, Terry. Put it in reverse. Oh, Lord.
And that was it for the day. So jumped out. I'd moved this stop limit here of 20 points down a little farther because I saw something going on. You'll see another level appear down here.
Lord, Jesus. Oh, Lord.
Right there, 680.70. But unfortunately, I jumped out before the bouncer. That did end up being the reaction right there. Fortunately, I got out too soon. And it was mostly by the rules. So I ended the day with negative 23.5 points. Not as bad as the played by the rules, but it wasn't great. And I stopped at 11:30, my usual time. On Tuesday, we had a slightly different tone. Monday's game plan noted that the bulls and the bears were pressuring the tape from both sides. But Tuesday gave us a little bit more clarity. The bears showed follow through, pushing the market down early and tagging 674 in the pre-market. That was about 5 a.m. in the morning. That 674 level, if you've been watching, was that breakout area from the old bearish consolidation. It was pretty meaningful a couple weeks ago. So what happened next? So a clean bounce from that 674 in the morning. We talked about that. Price recovered a bit in the morning session, but we were still looking for a meaningful gap down at the open. So if you were to zoom out at the daily and the weekly timeframes, we were looking at a textbook retracement underway. So essentially, the 674 is right around the 50% retracement from that low to high. And of course, we had the prior week's doji candle that was starting to play out the way that dojis often do, setting up for a reversal. We said that in the morning. said that the bulls would need to completely undo that signal by reclaiming last week's high, 689.70, close a week or so above it. That's a pretty tall order considering where they were. Based on the structure at this time, it looked like the bears were slowly tightening their grip. You can read through the notes here, mostly focusing on that 674. Not necessarily a tradable area. Depends on how price were to come into it. They never hit it today in the open session, but you can read through the notes here. More of a pivot or an axis level. And here is the 1 minute chart with all the levels plotted before the opening bell. And what happened during the regular session. So we'll walk through the official trades first. We got one clean entry in the morning at 676.50. That's this level here. They were above it at 9:45. We gave the market 15 minutes to settle in. They came back down, launched off this thing. We would have had a standard 4-point base hit or ridden this up higher if you wanted to. And after that, the rest of the day was pretty much filled with near misses, several of them. This first one here, 677.50, 677.45 would be the operating level. They came up within 10 cents, pulled away for enough for a base hit. There's your clue that there is bullish momentum. You don't want to trust this level anymore. Same thing up to 679.27, trying to trigger the trade when the SPY hit 679.22. Pennies away, pulled down. Now this level's off the table. Came down to 677.40, 55. We're going to add 5 cents to the original level and a near miss several times before they finally hit it. And these did work on the second, third, and fourth hits, but we're just playing by the rules. First hit is the best hit. We've already traded 676.50 on the long side with this bounce here. They got underneath it. Going short for a recycle trade here at 676.45 was yet another near miss right there. While they did react and pull down, you don't know if that's going to be it, and they're going to get above and go higher. So just playing by the rules. There was one 4-point base hit early in the morning. It was the kind of day where the edge stays intact, but most of the action happened just out of reach. In other words, if you played by the rules, you avoided trouble, especially when price launched off this first level here and then rocketed through this next one here. But you had the clue that there was momentum, and so not going short there was playing by the rules. That's exactly why the near miss rule exists. It protects us from chasing trades that no longer offer the right risk profile. So one base hit, nothing else. In my case, I missed that opportunity when they bounced off of 676.50. I just simply wasn't paying attention. I was kind of looking at what they were doing at 677.50. I was paying attention to that. I was going to go short with 6 contracts. Meanwhile, I missed the fact that they bounced off of 676.50. Anyway, you saw what happened. So I canceled my pending order there, waiting to go short up at 679.24, and I actually had that was a level I had in the system to trigger the trade automatically, and yet another near miss. So the rest of at least the first couple hours before 11:30, when I typically close up shop, there was nothing because of all those near misses. So I'll scrub ahead here and show you the rest of the day when I was at least in front of the screens, and I stopped at 11:30 with no trades. So here is what November looks like the first couple days. The playing by the rules log is off to a slow start. Negative, 32 points so far for these 2 days. My personal log here, negative 23.5 with 6 contracts is kind of painful. Not the start we want, but nothing unusual in the big picture. This is a game of long-term averages and repeatable rules. Some weeks start slow, but we show up the same way each day. Every level deserves the same treatment, regardless of yesterday's outcome. Looking ahead, price is in a key spot. Here is 674. It's kind of the high of this breakdown candle from October 10. So it's kind of important. They tagged it already in the pre-market, didn't hit it in the open session. This is a breakout area, so it's going to put some pressure on the bulls. If they give up 674, the door could open back into this, or will open back into this old bearish consolidation range, which doesn't necessarily mean the same thing, but it would support the idea of a trend reversal playing out on that weekly time frame. Let's go look at the weekly again here. Doji candle hit the trend line. They're pulling back down. The trend line might not be all that important at this point. Go ahead and get rid of it. Pretty far away. We could always bring it back if we need it, but price is kind of at a pivotal point. It's also worth noting that we're in the 8th month of this bull run here. Here's the monthly chart. So after 7 consecutive months of strength, it would not be surprising to see November show some weakness. This is just based on timing. There's no guarantees in this business, but the timing lines up with what the bears might consider an opening, on our 8th month here. So we'll keep an eye on 674. Could be a pivot point. Whether the bulls hold this or not could dictate the rest of the week. So that's a wrap for Monday and Tuesday. As always, the levels and the game plan are published before the opening bell for subscribers. Most of the time they work, so knowing which levels to watch out for and understand how to trade them does make a difference. Whether it's a base hit day or flat day or in the hole, it's a long-term strategy. We'll come back with fresh levels tomorrow and do this all over again, and we should start seeing some base hits pile up in the near future. Thanks for watching. I will talk to you again soon. Have a great rest of your day.